As we jump into number two, you're talking about understanding how work and earnings impact your benefits and how much can I earn and still get benefits. This is another popular question because nobody wants to get penalized and have to give up money, so to speak, but it can be a little confusing and muddied at times. So looking forward to you breaking this down as well.
You betcha. You betcha. So this is kind of number two in the fives. And we've already kind of covered full retirement age, that you can work and earn 100%. I do want to just talk a little bit about the less than for all. So again, if you're under your full retirement age, and let's just use 67 as an example, you can earn that 23,400. And if you go over that, Social Security is going to deduct $1 for every $2 that you earn over that. And we'll go over a couple examples. And then the year that you reach full retirement age, again, that's 62,160, they're going to deduct one for every three. So if you don't mind, Rob, we can just hop right quickly into the examples. And this, again, I'm using kind of simple math here, but Molly turned 62 this year and her benefit is $600. So that means she can earn the 23,400, but she's going to earn, she already knows it, or maybe it's the end of the year, she's going to earn 25,000. So the difference there is the 1,600. So what Social Security will do, if Molly tells them in advance, they will withhold January and February checks because they're going to have to withhold one for every $2. So again, using simple math, that's the 1,600 divided by 2. And if her monthly benefit is $600, they're going to withhold January, February. And then at the end of the year, they're going to say, okay, yep, that's what Molly earned. That's what IRS shows us. We owe Molly another $400 for February. And Molly would have also received her full check March through December. Now, if Molly didn't tell us, she didn't know. A lot of people, sometimes they think, oh, I'm going to be really close to that limit, but they don't know. What she can do is, the earnings with IRS and Social Security kind of still link up behind the scenes. Molly will get an annual report that asks her to fill it out, and she'll get a letter from Social Security saying, we're going to have to withhold, this much of either your 2026 checks, or you can pay us that back. She'll have the option to do that. And then just another example, if you're going to reach full retirement age this year, and I'm going to reach age 67, again, benefits 600, earnings limit is 62,160, but I earn 65,520. That's 3,360 over. So using simple math, dividing that by 3, because they're taking back one for every 3. They're going to withhold January and February checks if you told them in advance. And then again, the records will sync up at the end. They'll pay the difference, which is $80. And it's not a big deal. I don't want people to think, they're going to get in trouble. This is a bad thing. A lot of people miss out on benefits, Rob, because they don't go ahead and file because they're not exactly sure how much they're going to earn. But go ahead and file if you're kind of on the fence and it's what you want to do, or you're needing that extra benefit, and then it'll all come out in the wash. It's not a bad thing.
All right. I definitely thank you for, go ahead.
No, go ahead. Ask the question.
No, I was going to say, no, definitely thank you for breaking that down, because we do see that when we sit down with people in the Medicare space and where we're dealing with this, is there seems to be a lot of fear around this. I don't want to get penalized. I don't want to owe the government this or that. So to bring some clarity to that, I think is going to bring a lot of value to the audience.
Right. So I will just say, before we move on to the next slide, which I think is really the last one as far as really understanding how work and earnings affect your benefits, this is earned income. Okay. So this isn't if you get some other type of benefit, you have interest, you have rental, this is earned income for both of these. So for a wage earner, it's your W-2. For self-employment, of course, it's going to be your schedule. So this is the last one. Get this question all the time. I'm sure you do too, Rob. And that is, are my benefits going to be taxed? Should I go ahead and file because that's just going to put me in a higher tax bracket? And how's that going to look? It certainly could put you in a higher tax bracket. And I always advise people to talk to your accountant, your tax specialist, because I'm not a tax expert. I don't even play one on TV, not going to pretend.
Right.
These are the limits, right? Like these are the limits. They haven't changed much over the years. But the other thing that I really want to point out here is this is your combined income. Okay. So this isn't earned income. So your benefits can be taxed. All right. And they're taxed at different rates depending on your combined income, individual or married and filed jointly. So you can see here, if you're earning $25,000 or less and your combined income is $25,000 or less, none of your benefits are taxed. But just to use an example, go all the way down to the bottom left-hand corner there. If your combined income individual is $34,000 or above, up to 85% of your benefit. So up to 85% of their Social Security benefit could be taxed. So it's important for people to just know that this is potentially out there. It could potentially impact their decision making. But talking to your accountant, your financial advisor is really important about this.